Good morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, Coindesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, you two. We've got some inflation numbers out. How are you doing?
Inflated.
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 On point. Yeah. All right, well, let's see how Bitcoin is doing. The Coindesk Bitcoin price XBX index is currently trading at $56,300 and around $90. Bitcoin is still up about 1.5%. It did dip, though, on that CPI data release. And the Coindesk Ether price ETX index right now is at 42.99. ETH is skyrocketing up 8% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as a leader in crypto news, events, and data. So, Lawrence, we saw U.S. consumer prices rose faster than expected in April from a year ago. Bitcoin dipped slightly on the news, but the crypto markets are up overall. And U.S. stocks are pointing down. What's going on?
Okay, so let's be clear. So April inflation came in at 4.2%. It was expected to be 3.6%. But we have to remember that we're coming off a really low base. Last year, this time, we're at the beginning of the pandemic when people lost their jobs, the economy went to a standstill. So we can expect higher than regular inflation. Remember, the Fed's target is about 2% annual inflation rate over a period of time. It's not every month. So you're going to see these ups and downs. Now, in terms of crypto markets, they I think people were rational in this situation. They said, okay, this isn't anything to react to. It's you're going to see these high numbers for the next couple of months.
ETH has also hit a major milestone.
Yeah, $500 billion. ETH is now worth $500 billion. That's more than the value of JP Morgan and Visa, as we pointed out today on CoinDesk. At the price of ETH to Bitcoin in March was 0.03 Bitcoin. It is now 0.076. So it's more than doubled. Mm-hmm. And the volume on it for ETH, and yesterday on the eight exchanges that we tracked, $80 billion versus Bitcoin, $78 billion. More excitement. Money's moving into ETH from Bitcoin.
Incredible. Also, the SEC is closely watching the crypto markets. They're warning mutual fund investors about the risks of Bitcoin futures, right, Emily?
Yes. So the SEC staff referred to Bitcoin as a highly speculative investment. Now, obviously, this would not come as much surprise to most people, but this is important because, as you said, it is a warning specifically to investors in mutual funds. However, people are watching the SEC carefully, reading the tea leaves to see what this means for a Bitcoin ETF, which has yet to be approved in the United States. So when they say something is highly speculative, it sends a signal that there might be less enthusiasm for approving a Bitcoin ETF. Obviously, we don't really know. It's not a very clear statement, but it's something to watch out for.
Indeed. Let's check out the crypto markets.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, our next guest believes Bitcoin will hit a $250,000 milestone in the next 5 years. Joining us now to discuss is Morgan Creek Capital Management founder, CEO, and CIO, Mark Yusko in New York. Welcome, Mark, to the show. Good morning.
How you guys doing?
Good morning. All right. Very well. $250,000 Bitcoin. How did you come up with that number? There's some modeling done. Sometimes people throw these numbers out of thin air, it seems.
Well, so that number actually is just a simple calculation of comparing Bitcoin market cap to the monetary value of gold. So people talk about gold all the time and Bitcoin gold equivalents. And look, Bitcoin has become digital gold. If you think about gold as an asset, it has a monetary function, then it has a jewelry and other industrial use function. People talk about all the gold in the world is about $8 trillion. Really only about half of that is used for monetary purposes, bars and coins, and actually functions as money. The rest is jewelry and kind of offline, so to speak. So at that $4 trillion level, that's about a $250,000 Bitcoin price per unit. But that's really just a milestone, right? what matters is not the daily price of Bitcoin. Daily price of Bitcoin is kind of a meaningless thing. What matters is finding an ownership percentage that you're comfortable with in the greatest computing network we've ever seen.
So how are you advising clients on their allocations in their portfolios to prepare for something like a $250,000 BTC?
We've been very consistent on allocation of digital assets. We think that everyone should get off zero. That's my first, my big hashtag, get off zero. Look, if we look back 5 years from now, we'll say that fiduciarily, you were derelict in your duties if you had zero exposure to digital assets. And that's not just Bitcoin, that's Bitcoin, Ethereum, DeFi, other assets, other protocols. And every stock, every bond, every currency, every commodity, every physical business, every piece of real estate, every piece of art, every collectible car, all of it is going to be digitized. Every single asset in the world is going to be digital. So you've got to move in this direction. So we say for physical liquid protocols, probably 1% to 3%. Although if you're younger, I could push that number meaningfully higher. There's actually an interesting digital divide. If you ask anyone over 35, who's your broker? I don't know, UBS, Morgan Stanley. How much gold do you have? I don't know, 3-4%. How much Bitcoin do you have? Oh, are you kidding me? That's a Ponzi scheme. Haven't you heard Jamie Dimon? He said it's a fraud. Ask anyone under 35, who's your broker? What's a broker? You mean my Robinhood account? Yeah, I got that. How much gold do you have? Oh, are you kidding me? Boomer rocks? Zero. How much Bitcoin do you have? I don't want to talk about it. Why not? It's a big percentage of my net worth. So beyond Bitcoin, beyond Ethereum, what we really like and where we spend most of our time is in private markets, building out the infrastructure for these markets. So we've invested in things like Coinbase and BlockFi and a lot of other investments over the years. We run venture capital funds. And so we think investors should have another couple, 2, 3, 4% in those infrastructure investments.
Mark, one of the big narratives going on right now is that inflation is about to take off. But yet we're seeing the price of gold. You mentioned your target is based off of gold prices. We're seeing the price of gold at about 1,800 or so. It's only 12% higher than at the start of the pandemic. So one of the things that everyone says is, well, inflation is going to go up because of the stimulus. But isn't that really all it's doing is just increasing the appetite for risk rather than, and that's why we saw this bump up in Bitcoin as an inflation, rather than as an inflation hedge. It's more of an increase in people's willingness to take risk because they have the sort of the Fed to back them, or the federal government to back them up with stimulus checks. And that's also perhaps why we're seeing the rise in alts. So is gold and Bitcoin, is that really the same comparison to make?
Look, gold has been money for 5,000 years. An ounce of gold has bought a fine man's suit or a fine woman's suit for 5,000 years, from a suit of armor to a suit during the American Revolution to a zoot suit in the 20s to a Savile Row suit today. So gold is money. In fact, money is different than currency, right? Money is something that exists in the absence of a liability. Gold, and now Bitcoin, are the only things that function in that way. Everything else is just credit or a currency that's backed by government debt or some other liability. So when we talk about the monetary value of gold, it's that store of value, that store of wealth. And forever, gold has been that. In fact, here's the crazy thing. Everyone's talking about inflation today. That's the wrong thing to talk about. We're not talking about inflation. What we're talking about is devaluation of currencies in the Western world. The Western world is up to their eyeballs in debt. They have no way to pay it back. Their only choice is to devalue it by trashing their currencies. That is how empires eventually fall. It's happened throughout the course of history. Every fiat currency eventually falls under its own weight. And that's what's going on. If you look at the S&P 500, denominated in gold, it's the same price as in 1996. If you look at the S&P 500 in terms of the Fed balance sheet, it's the exact same as it was at the start of this mess in 2008. So what we're seeing is a systematic devaluation of the currency, and that shows up in quote unquote higher prices, but it's not that the assets are getting more valuable. It's not that gas got better. It's actually worse because it has ethanol in it. It's that the purchasing power of your currency is going down. And the reason there's no rampant inflation, and I think we're actually closer to deflation than inflation, is there's no velocity of money. People, they're printing lots of money. They printed 40% of all the dollars in the history of the Republic in the last 12 months, but it's not circulating. There's no demand for loans. There's no small business growth. All those things as a result of lockdown and other reasons, demographics, really bad demographics are all a problem. So this is a transient, as you mentioned, a really good point at the beginning of the show. It's a transient uptick in CPI inflation. It'll go away by the end of the summer when the base number goes away. But at the end of the day, that devaluation of currency, that's not going to stop. And that's good for Bitcoin, good for Ethereum, good for crypto broadly.
So you're clearly very bullish, and you've talked a lot of things that could sort of boost Bitcoin. But if there were to be a risk to the Bitcoin market, where would it come from? What are the biggest risks to Bitcoin? Like if something was going to negatively impact the price, what are you looking at as risk factors?
Yeah, I mean, really important question and something we should think about every day. I think what's interesting about Bitcoin in particular is it's won from the standpoint of something called the law of increasing returns. Paul Romer won the Nobel Prize for this a couple of years ago. And it says that it's not the best technology that wins. It's the technology that gets critical mass through the network effect first. And Bitcoin has clearly done that as a digital store of value. There are plenty of other things that could have won, but they didn't. So Bitcoin has that. So from that standpoint, I don't see the risk. Everyone talks, it's going back to zero. No, it has this Lindy effect now, where the longer it survives, the longer it will survive. And because of open source, no one can really invent something better because you can just copy paste those improvements onto the chain itself. So from that standpoint, I don't worry about that. What I do worry about, and probably irrationally, is a backdoor that whoever Satoshi Nakamoto, whoever he, she, they, although I guess supposedly self-identified as he, but I'm not sure about that. But whoever they are, put a backdoor in, that's a real risk. I don't think it's a big risk, but it's something I do think about from time to time. Maybe it's because I was watching Mr. Robot the last couple of weeks. Yeah, exactly. So,
Mark, what about this? Yahoo and AOL, they used to be the dominant players during the dot-com boom. They just got sold up by Verizon for paltry $5 billion. To PE firm, could the same thing happen to Bitcoin?
Again, I don't believe so because we live in an open source world, right? The big technological transition was North Carolina company here down the street from me, Red Hat, right? I remember the guys from Benchmark Capital coming to North Carolina 20 plus years ago saying, hey, we want you to invest in this great company. It's a great idea. They're going to give away software for free. I'm like, that's a good business model. How? Yeah, just got sold for $40 billion. It's a pretty good business model. But what open source does, it just changes, right? MySpace got beat by Facebook because Facebook had better technology. That can't happen in an open source world because you can take those enhancements and put it into the open source world. Is it possible we'll have an innovation beyond triple entry accounting sometime, 100 years from now? Possible, but triple entry accounting is the innovation. That's the thing. And the implementation of it, blockchain technology, the implementation through Bitcoin, it was first. And I think it wins. And I always say, I hate to quote Ricky Bobby, but if you ain't first, you're last. And that's the way this works, is by getting out first, by getting the network effect. We now have the largest computing system in the world. 1,500 times more powerful than the CERN supercomputer. Never had one fraudulent transaction. It's the most secure computing network on the planet. It's now used by, arguably 100 million people, on its way to billions. And it will become ubiquitous. And triple entry accounting does something that's really, really unique. In the old days, Christine, I lent you money. I wrote down in my book that you owed me $100. You had to trust that I didn't write down 200. So then we said, what about two ledgers? Then the Medicis came along and said, yeah, we'll take care of that. We'll be your trusted middleman. We'll take a fee. But now with triple entry, we don't need banks, middlemen. What we can do is directly through this massive computing network, we can secure trust. And we have a single point of truth on the blockchain. And that innovation is so big, so mind-boggling that people focus on the wrong stuff and they're worried about the daily price of Bitcoin. What you should be worrying about is how do you get ownership of this incredible network?
So one of the most commonly cited risks to the Bitcoin network is actually, it's not technological, it's government, right? It's government regulations. Now, we know that no government can completely shut down the Bitcoin network. That's impossible. Right. But what they can do is make it a lot harder to access. And it's interesting. I mean, you're talking about trustless transactions. And yes, in theory, that is what Bitcoin is for. But in reality, a lot of people coming into the market are coming in via intermediaries. They're coming in via banks. They're coming in via centralized exchanges. So there's a lot of outside factors that could hamper the growth of Bitcoin. Are you not concerned about that at all? You know, for example, some government, it doesn't have to be the United States, it could be China, it could be India, just making it a lot harder for citizens to access Bitcoin by, for example, cutting off access to the banks, which China has already done, or, you know, cutting off centralized exchanges, which China has already done. So is this something that's on your radar at all?
No, it's of course, it's a great question and a really important point. And let's think about it, right? So we've seen this movie before. In 1933, the government made it illegal for U.S. citizens to own gold at the price of $35. So it was illegal from 1933 to 1974 to own gold in the United States. People actually owned gold that whole time. They didn't turn it into the government, and the price went from $35 up to about $800, and now, you know, a couple $1,000. So it didn't work. China in 2017 said they were going to ban Bitcoin exchanges. Price fell 40% overnight. People freaked out. What happened? Those exchanges moved to Japan and South Korea. They waved them in, said, bring it. We'll figure out a way to tax it. Good for us. You can't shut down a decentralized network. To your point, you can make it really hard, the on-ramps and off-ramps. You could make it a criminal activity to convert fiat into Bitcoin. People will still do it if it protects their asset. Imagine being in Venezuela and having Maduro and his cronies steal all of your wealth through the devaluation of the bolivar. If you change that money into green pieces of paper, US dollars, you were able to preserve some wealth. If you exchanged it into Dash, you did even better. If you exchanged it into Bitcoin, you did even better. Take it for this example. In Argentina, right, the price of Bitcoin in the 2018 bear market, which, you know, price of Bitcoin fell 84%, the Argentinian price never went down. Not once. So supply and demand will always drive these things. And ultimately, you can't ban a decentralized asset. You can, to your point, make it tough to transact. And look, I'm going to spend in dollars. I live in the United States. I'm probably not relocating anytime soon, although they're trying to force my hand, I guess, with some of these tax policies. But I will spend in dollars. So I do need to have some portion of my net worth in fiat. And that's why I don't tell people to put all your wealth in crypto, particularly not all of it in one single crypto. That would be, I think, foolish.
Mark, you know, we talked, you just mentioned the network effect of Bitcoin. And I'm wondering, you have Dogecoin recently just became relatively popular meme, if you will. But doesn't it also threaten that whole narrative that Bitcoin's network effect is insurmountable? You know, it might be a joke coin, the technology might not be great, but couldn't the threat just be mass adoption of something else, whether or not it's not as good, such as VHS beating out Betamax?
Look, absolutely. Look, to me, I thought we could get a whole show without talking about this silly thing, but Doge to me is everything that's wrong with the markets right now, right?
But isn't that what people said? In many ways, that's kind of what people were saying about Bitcoin.
No, not at all. Different, totally different, right? Bitcoin actually
was saying the same things about Bitcoin as you're saying about Doge.
Plenty of people talked about Bitcoin, but here's the difference, right? So Dogecoin is everything that's wrong with the markets in the sense that what you have is the gamification of markets. You have people who were shut in their house. They couldn't go to Vegas and gamble. They couldn't gamble on sports. Humans like to gamble, particularly guys, actually, but not just guys. But humans like to gamble. And they got free money. And what'd they do? They deposited it in trading accounts and they started trading in stupid stuff, right? They bought Hertz equity. Hertz is bankrupt. The equity is worthless, but people still trade it. They bought GameStop, a dying business. And look, in the short run, if you get a bunch of people moving an illiquid asset, you can pump the price. And that's been going on for decades. It will end badly this time the same way. Go back and look at MicroStrategy stock in 2001. It went from $3 to 331 back to 3. Doge will go back to 0 because it doesn't have network effect the way Bitcoin does in terms of developers working on it, people adopting it, people using it on a day-to-day basis. It's got a handful of Reddit guys, pajama traders that pump it up, and a couple big guys who own big stacks that they're going to dump on the unsuspecting public. And I think it's sad. And I think a lot of people are going to lose a lot of money.
Mark, you explain a solid case for Bitcoin, but we got to wrap it up here. But I appreciate your time and your insights, and thank you very much for joining us this morning. No worries. Appreciate it. Thanks, Pete. Good to be with you guys.
Soon.
Likewise.
Take care.
All right, that was Morgan Creek CEO Mark Yusko. Coming up, crypto and MoneyGram, how the global money transfer company is making Bitcoin available to its customers. Welcome back. Over the past 80 years, MoneyGram has established itself to become one of the top money transfer companies in the world. Now they are partnering with CoinMe, a U.S. crypto cash exchange, so customers can buy, sell Bitcoin with cash at over 17,000 MoneyGram locations across the United States. Joining us now is MoneyGram CEO Alexander Holmes and CoinMe CEO Neil Berquist in Seattle. Welcome, Alexander and Neil, to the show.
Thank you.
Great to be here.
All right, so perhaps you can explain this partnership. Does this reduce the cost of sending money abroad or just expand options? Perhaps, Alexander, you can go first.
Yeah, sure, absolutely. Thank you for the opportunity. Yeah, so MoneyGram is extremely well known for our ability to move, literally hundreds of currencies from point A to point B instantly around the world. And it's something we do for years, as you mentioned. And so this is really an expansion of that and really the first opportunity for us to move really upmarket into what are now largely recognized around the world digital currencies, and with this case with Bitcoin. I think what Neil's created with CoinMe is wholly unique. It's one of the first opportunities for consumers anywhere to use cash to actually get into the Bitcoin market and begin to actually participate in something that is widely known by about 80% of the market, yet only about 20% of people actively participate. So for us, it's a huge opportunity to change a little bit of the profile of MoneyGram to make Bitcoin available to those who don't have accessibility to it today, and really begin to think very differently about our network.
But Neil, with crypto, do you really need MoneyGram? Some people believe crypto is meant to replace payment transfer firms like MoneyGram. What do you think?
Well, as Alex said, we're still in the early days, and there's more demand than there is ownership. And MoneyGram is true to our mission of providing access to digital currencies and a better financial future. They spent 80 years building global fiat rails that we have now Bitcoin enabled, and we'll soon add other cryptocurrencies too. So we solve the access problem. You're looking at less than 2% global adoption for Bitcoin. We're still early, and MoneyGram's choosing to ride the wave as opposed to being crushed by it. So it's incredibly exciting partnership for the whole industry.
So just to follow up on Christine's question, though, in Latin America, for example, with the remittance market, you have people who, for example, are just meeting people on WhatsApp, right? And they're, agreeing to transfer Bitcoin across borders. And actually, some of them have explicitly said that they are doing this to avoid MoneyGram because of, it's faster and it's more direct and the fees are lower. So I guess that's sort of just to reiterate what Christine said, if people are already finding ways to do this and they're purposely doing it to get around an intermediary like MoneyGram, how does MoneyGram fit into this picture?
I think the key here is you have to own Bitcoin. You have to own Bitcoin first before you can transfer Bitcoin. And so MoneyGram's going to jump on that opportunity to be able to leverage their rails to enable people to own Bitcoin and other cryptocurrencies.
Yeah, and literally, we're doing, millions of transactions a month, moving money from point A to point B around the world. And in fact, about 32% of everything we do today is digitized. And so consumers are coming to see MoneyGram in a very different way. Our app is one of the most downloaded, highly rated apps in the financial industry. And so for us to get into, into crypto markets, is really just a bridge and actually creates more interoperability for consumers than they have today. I think Neil's point is an excellent one, which is, how do you actually, acquire Bitcoin? And if you sell it, how do you actually get fiat back for it? I mean, it's fascinating listening to Mark on the last broadcast here coming up to this discussion. You have to put value on something, and the only thing to put value back against is another asset, right? So you either have to pick a currency like a US dollar, or you have to pick gold as your medium of exchange, because that, at the end of the day, is what things are priced in. Years down the road, perhaps things go a different direction, and everyone's interoperability trading in tokens and assets alone, and there is no more fiat. But I think we're an extremely long way from that evolution. And so to be able to actually, enable people today in the mass market that just can't access these tokens today and these assets is a huge step forward, I think, and very exciting for MoneyGram.
Are there any particular hot areas in terms of location? I know, for example, I just mentioned Latin America. I just had heard that this is a big market for these kind of remittances. But where are the geographical locations that are the hottest right now for your business?
For us, the big markets, at least on the send side, tend to be, markets like the United States, Europe, obviously Middle East is a very large send market, and then obviously across many different parts of Asia. On the receive side, sends today going into countries like India, Mexico, Indonesia, Philippines definitely are at the top of the stack and continue to accelerate in growth. We're seeing a lot of good growth in Africa, particularly countries like Morocco. So when you think about that and you look at, even markets like Korea, where the digitization and the movement upstream into sends that are really largely driven by digitization, and then you actually blend back into that where consumers are going with crypto and sort of the view of that from a positive perspective in those markets, it really creates an interesting paradigm for us, and really an interesting opportunity to think very differently about what it means to move money.
Good morning, gentlemen. Alexander, this isn't your first foray into crypto. Of course, you had a deal with Ripple. Is this a replacement of that? That deal has fallen apart, I guess. Is this a replacement of that deal?
Not really at all. What we were doing with Ripple was very different. And actually, we were looking at Ripple and utilization of their ODL product and RippleNet to think about the actual flow of the funds, right? With what we're doing with Neil and CoinMe, this is much more about moving fiat into the CoinMe wallet, if you will, and then allowing consumers to buy Bitcoin once it's in the CoinMe network. After that, they can obviously trade Bitcoin, do what they want with Bitcoin, and then if they want cash back, they can actually then sell that in the CoinMe network and then pull that out in cash into the MoneyGram network and into your pocket. So from that perspective, it's totally varying. It's unfortunate what happened with Ripple. It was a great pilot for us and really moved us, I think, progressively forward in blockchain and sort of what was happening in the crypto world. And obviously with the challenges that they're facing today with the SEC and government regulation, which continues to be a big topic in the crypto space, it made it very difficult to continue to operate, particularly in the United States. But we'll see where that goes down the road. And I do think that there is a continued future and an opportunity in blockchain and perhaps in crypto as well, in terms of, ledgers and movements and settlement and flow of funds.
So along those lines, any plans of expanding out into stable coins in terms of expanding that way for your remittance businesses?
Yeah, absolutely. I guess one press release at a time and one partnership at a time. But no, I think what's happening with stablecoins is extremely interesting as well. When you think about people right now, largely utilizing Bitcoin and Ether and others, not necessarily for transacting purposes, but for a store of value. The same can be really said about stablecoins and the volatility of local currencies and markets around the world. That continues to be one of the largest challenges that consumers have in markets in, Latin America, South America, across Africa, Asia, et cetera, where the volatility of their local currency causes fluctuations and difficulty with their ability to carry on with their daily lives. Stablecoins could have the potential to allow you to park that asset backed against maybe something like a US dollar, and then pull those funds down at a future point in time. So super interesting, and I think a dynamic opportunity that's occurring as well. But again, what's fascinating about that is you call it a stable coin. It is a stable coin, yet it's backed by something, and typically it's backed by again a fiat currency, which is something we do extremely well. So I think there's a huge future in the interoperability of fiats back into cryptos, and I think coming full circle, making it mainstream is really what's going to make this the most successful, I think. At the end of the day, most of your digital assets today are not owned by the people that I think would benefit the most from it. And that's what's fascinating to me about it is you've created something that's decentralized, which in many respects, and when you think about sort of purist views of crypto, it should be utilized by the masses, yet it's not. It's really, hoarded in some capacities by a lot of hedge funds and others that are already sort of in that upper echelon of society to begin with. So it's sort of ironic to me, and I think that the democratization of it and the push that Neil's trying to do here is super fascinating, and hopefully begins to bring that more mainstream.
Neil, would that be hard to do? Flick a switch and start up with stable coins? And also another question for you, Neil, how does this all change your business?
Yeah, for us, on the stablecoin front, Bitcoin is the highest in demand right now, and that's the focus. Although our platform is under development to support other cryptocurrencies, which we'll be adding. So we'll have a future press release for MoneyGram to run with in the future. For us, we started as the first licensed Bitcoin ATM in the U.S. 7 years ago. We were one of 5 in the world, and now it's really exciting to leverage the CoinMe API to crypto-enable existing infrastructure for the existing financial institutions. And MoneyGram is a great opportunity. They have over 350,000 agents globally, and there's 20,000 Bitcoin ATMs globally, just for comparison. And I think we're going to see this existing infrastructure get crypto-enabled. That's what we do as a company, and we are going to usher in mainstream adoption for Bitcoin and digital currencies.
All right, exciting stuff. Neil, Alexander, thank you for joining us. Looking forward to seeing how this develops. Appreciate you coming onto the show this morning.
Yeah, thank you very much for having me.
All right, that was MoneyGram CEO Alexander Holmes and CoinMe CEO Neil Berquist. Time now for the daily forecast and update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, May 12th, 2021. I'm Angie Lau. Let's get you up to speed from Asia to the world. The meme coin craze takes China by storm. Hashtag SHIB, short for Shiba Inu, has become a trending topic in Weibo, China's Twitter-like microblog platform. Get this, nearly 180 million people read the topic, and there have been 7,500 discussions on hashtag SHIB since last Friday. All that talk has turned into action in the markets. Gate.io exchange tells us at Forecast News that they are seeing upwards of $500 million of daily trading volume on the coin.
I think it was only a matter of time until we saw a Doge killer project, and that's exactly what Shiba Inu is. We've seen so much enthusiasm, and I do have to say China in particular cannot get enough of Shiba.
Would-be investors took to social media, however, to vent frustrations that all of the interest in SHIB has caused a backlog in exchange registrations as Know Your Customer or KYC requirements for new accounts outpace processing capacity. Toya Zhang, the COO of AAX Exchange, says they're not backlogged, but they are seeing a whole new group of crypto investors signing up starting when they listed Dogecoin at the end of April.
We also see this new registered users on our platform are actually newbie users from the behavior we monitor that they're actually holding cash, trying to get into this market.
Meanwhile, new coins continue to appear, many based on the same Shiba Inu dog or on Elon Musk himself, hoping to become the latest meme to catch on. So how is the original coin, Bitcoin, holding up? Not bad, up just 2.5% at the end of Asia trading hours today. Meanwhile, Ethereum's run hits another all-time high. And while some aggregators have not added Dfinity's Internet Computer, or ICP, it's ranked 8, according to CoinMarketCap data. A tax on crypto trading, according to multiple reports, that's the plan under consideration in Indonesia. Southeast Asia's biggest economy needs to replenish state funds after taking a big hit from the COVID-19 pandemic. A crypto tax could be one way of helping that effort. The country has seen a sharp increase in the number of local crypto investors. Believe it or not, there are more crypto investors than those in traditional equities right now in Indonesia. It is a growing trend we are seeing across the region. And finally, who doesn't like a little escape from reality? 3D avatar app Zepeto from Naver, one of Korea's largest tech conglomerates behind the Line messaging app, is partnering with blockchain-based gaming virtual world The Sandbox to launch NFTs. Zepeto is one of Asia's largest virtual worlds with over 200 million users. That's more than the population of South Korea. Luxury brands like Gucci and popular K-pop girl group Blackpink are already on Zepeto. The collaboration will see Zepeto NFT wearables like sneakers and game equipment in the Sandbox metaverse and a parallel Sandbox world in Zepeto.
It will take time, but that next generation of gamers who are getting used to play to earn, they will not know what free-to-play has been before, and they will just take it as it's now normal to be able to be my own bank, to be able to actually sell my digital goods, the one I made, the one I earned by playing.
It's no longer virtual, it is the new reality. And that's the Daily Forecast. I'm Angie Lau. Until next time.
The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, there are a lot of blockchains out there, but they don't have to be exclusive from each other. Enter interoperability, the concept of getting blockchains to talk to each other. The Cosmos Network is one interoperability project that aims to unite blockchains. Joining us now to discuss is Cosmos Network core developer Jack Zampolin in San Francisco. Welcome, Jack.
Good morning. Hey, thanks for having me this morning.
Great to have you. Jack, perhaps you can give the dummies version of how the Cosmos Network works and who is using it.
Yeah, that's a great start. So the Cosmos Network is a lot like the internet. And instead of computers, the nodes on the network are blockchains. So in the same way, any two computers that are on the internet can connect to each other and share data. Any two blockchains that are a part of the IBC network, and that's what our interoperability protocol is called, is IBC, inter-blockchain communication. Any two of those blockchains can connect and talk to each other. And as far as, how is adoption so far, we've seen adoption from a lot of major exchanges. Binance Chain is built on top of the Cosmos SDK, OKB, Crypto.com. We see some major decentralized exchanges like Terra and Rune, and a number of other projects, including, of course, and most importantly, the Cosmos Hub built on top of this technology.
Yeah, we have a photo of that right there. And your latest news is that a decentralized exchange called Gravity concluded a competition on their testnet. Gravity allows users to swap digital coins and create liquidity pools between any two blockchains. Tell me about this exchange and why it is better, or what differentiates it from the other decentralized exchanges out there.
Yeah, this is the first multi-chain native exchange. We've seen a lot of projects building bridges to different blockchains, but Cosmos has been working on this kind of generic bridging technology for a lot of years. We shipped it earlier this year, bringing IBC to the hub, and we've started to see chains like Crypto.com and Akash and some other ones connecting to the hub. And this DEX is designed to settle those assets moving across those blockchains and to provide a central spot for those assets to be settled. What makes it different from other AMMs? things like batch execution and native limit orders will enable more efficient price discovery. But the big differentiator is that this is a multi-chain native decentralized exchange.
So for people who don't follow this carefully, Cosmos sounds a lot like Polkadot, which has kind of a very similar pitch, which is sort of to create this, internet of blockchains. What is Polkadot finally launching eventually mean for Cosmos? And what's the easiest way to distinguish Cosmos from Polkadot?
Yeah, absolutely. Polkadot has this architecture where all of the chains in Polkadot plug into this top level relay chain, and they pay rent to that chain. This is like when you spend a lot of money to build your house, you're going to end up paying taxes to the local government. And the Polkadot chain is basically like the local government. In Cosmos, it is like the internet. Any nodes on the network can connect with each other, so there's no need for central intermediaries. This is why we've seen exchanges and other projects pick Cosmos over Polkadot over and over again. One other thing that differentiates Cosmos versus Polkadot is we've actually shipped, and we've shipped over and over again for years now. And we're already in the market with our IBC protocol, whereas Polkadot is still potentially over a year out for the relay chain having parachains.
Well, what happens when they finally launch?
We're in a very stiff market competing against a lot of different projects at this point. And we've seen incredible adoption over and over again, and we see projects picking us because we have the best developer experience. So what's going to happen when Polkadot goes live? I don't know. I don't really anticipate a huge explosion of economic activity over there. Because they're right now doing the work to sort of build up those initial projects. Some of them are starting to see some initial traction, but we've got like $140 billion of economic activity on Cosmos chains, and we're in the process of connecting that right now. So this is a huge market. There's room for a lot of projects in it. Personally, as a Cosmos bull here, I do see that we have a much stronger hand out in the market in terms of adoption. And actually real economic value running on top of the system. We beat the competitors time after time.
So Jack, looking at DEXs such as Gravity, what does it mean for traders on the Cosmos networks? How will they be able to use it, and how will they make money?
Yeah, that's a great question. So it's just like using Uniswap on Ethereum. There's a very similar wallet to MetaMask that connects all the different Cosmos chains. It's called Kepler. And you will go to a website, gravitydex.io, load up your wallet, and then you're able to trade any assets in that wallet. If you need to move them over from one chain over to the Cosmos hub, Kepler helps you do that. So a very similar experience to using other decentralized exchanges. We didn't try to make it too different. Also because that experience of just having the two currencies and then clicking swap is so easy and so addictive that people love it.
All right, Jack, we got to wrap it up there, but thank you for joining us this morning. Good luck on Gravity.
Absolutely.
And I saw there was a bug bounty out there, so it's still in the testing phase. Looking forward to the official launch.
Yeah, absolutely. We had about 25,000 folks participate in that competition. So that was some great stress testing. That thing's ready to go to market, and we will see it live on the network probably by June 15th is my guess.
Right. Thank you for joining us.
Awesome.
All right,
Thank
that
you.
was Cosmos Network core developer Jack Zampolin. Time now to check in with Coindesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of Coindesk's The State of Crypto newsletter. Hello there, Nick. So we're hearing from the FDIC, the chief there, saying that the agency wants to know more about digital assets. What can you tell us?
Yeah, yesterday, FDIC Chair Delana McWilliams gave a speech to the Federal Society saying that the agency is going to put out a request for information from banks about how they're interacting with crypto assets and what, if anything, the FDIC should do. She also pointed to the Digital Yuan project as one reason why the FDIC is paying attention, when, just noting that this is an effort that's underway in China.
So Nick, our friend Senator Lummis of Wyoming is proposing something when it comes to distributed ledgers. What is that?
Right. So the U.S. Senate, one of the Senate committees specifically, is looking at a bill called the Endless Frontier Act, which would create a technology directorate within the National Science Foundation. Senator Lummis has proposed an amendment to add distributed ledger technology to one of the key focus areas for this new directorate, meaning it would look at how this technology is being used and possibly devise a strategy around it. I believe the amendment has been accepted and the bill itself is still in markup.
Nick, quickly, anything else you're looking at this week?
So we do have some additional ETF news. The SEC last night posted a statement regarding Bitcoin exposure to within mutual funds, and it does seem to have some implications for ETFs, but very specifically ETFs filed under the 40 Act, which is not the one that most ETFs are filed under. So a little bit of nuance there. I'm still looking at the details.
All right, Nick, thanks for joining us with your update.
Thank you.
All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn, for joining me this morning. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.